Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to be talking about cruise stocks. It's been a little over a year since the cruise stocks crashed along with the rest of the stock market. And back at this time last year, cruise stocks were like a mega popular pick as a simple rebound play on the stock market crash. Back then, I was very much against that trade just because I was really worried about the financial condition of the cruise stocks. So we're going to look back at that, see where cruise stocks are today, and talk about what might be in their future. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing. And if you like stock market analysis like this, please subscribe to the channel, give this video a like. Thank you to everyone for your support. All right, so back on March 9th of 2020, I did this video here, Don't Buy Cruise Stocks in 2020. And you want to talk about a mixed bag. I got almost as many dislikes as I got as likes. And granted, I have a tiny channel, but there were a lot of people upset saying that you don't understand, this is a long-term investment and you're crazy and all these things, which is fine. I don't mind that. What was really interesting to me was how ferocious people were about investing in the cruise lines. And my only point on this was that there was better buys out in the market bottom, that you didn't need to get into stocks that were going to have major debt problems, arguably zero revenue for the long-term future. And while cruise stocks could go up over the next year, which they did, there were other investments out there that offered a higher ceiling, in my opinion. So I followed that video up with this one, 5 travel stocks to buy over cruise lines. And I think I communicated my point much better, but I called out a few stock picks: Expedia, Booking, Hilton Worldwide, Las Vegas Sands, IYC, again, CCL, and all the others. And my point in the video was, should you focus on cruise line stocks that are down the farthest, so they've taken the biggest dip out of so many stocks, or should you look to limit risk and target travel stocks that could bounce back much faster? But to be fair, you had a lot of social personalities and stuff banging on cruise stocks, and it's kind of turned into this new stock market regime here where you don't pick against popularity, or you can just assume that they're going to be throwing tomatoes at you, and that's exactly what happened. All right, so we're going to take a look at where cruise line stocks are pegged for the future in terms of analysts' opinions and all that. But let's take a quick look at the scorecard, if you will, because I got so much heat for that cruise stock original video. Let's see how my picks fared a year later to the original cruise line picks. All right, so I had to go back in that March 9th video to figure out where the prices were. So CCL went from $28.74 up to $27.60, so plus 30% in just over a year. Not a bad investment. RCL was at $48.27. That's up to $88.26, which is plus 80%. Norwegian Cruise Lines, 1981 to 28.58. That's plus 40%. Those by themselves, not a bad investment at all. And I think these numbers alone just go to show you, I was pretty much wrong on the stock picks for the cruise lines because there was opportunity there, and the momentum of buyers really carried these much farther, honestly, than I would have imagined. And we know how fundamentals have sort of been erased over the past year, and so these trending stocks have done well. All right, now on my side, I put out a few picks that I thought would bounce back faster. Some of them did. Expedia from $52 to $174. The alternative picks video came out on March 20th, so it's a little bit later. Booking Holdings went from $1,200 up to $2,200, plus 86%. Hilton, 61 to 123, plus 100%. And Las Vegas Sands, 43 to 63, plus 46%. So I guess the one that maybe I didn't beat as well would be RCL, coming in at 80%. That held up to Booking Holdings a little bit shy, but it would have beat Las Vegas Sands. All right, so a little self-reflection to the year before. I would say that where I really went wrong was just coming out and being like negative on the cruise line stocks. And this is something I'm trying not to do anymore. Just coming out and saying like, I hate that pick, it sucks. Like that was the wrong way to approach it, because at the end of the day, there was opportunity in the cruise lines for a bounce back. They were at a very, very low point. And let's face it, they had a horrible year in 2020 all the way through 2020. So a lot of people thought there would be bounce back and fall and all that stuff. No, it was just straight selling more stocks, selling more bonds, parking the ships. But what I underestimated for sure was the fact that the stock market is always looking ahead. So by the time we got into maybe July or September, things were on the board for the cruise lines to bounce back a little bit, and their stocks took off. And now here we are today, where the future looks very bright for the cruise lines in the short term as far as bringing revenue in. Now they still have to deal with their debt problem, and that's going to take many years to squash that back down to a reasonable level. But to be fair, companies like Expedia and Hilton and Las Vegas Sands, they have their share of debt loads as well. All right, so is the run over in cruise lines? Should you get out now, take the profits that you had? We saw whatever, 30%, 40% plus gains in those stocks. Let's take a look at what the numbers say, and we'll see what maybe the future holds. All right, so let's take a look at where some of these stocks could land. We'll start with Carnival. And one of the quick ways to get an idea of which way these companies could go is just simply hit the 5-year chart and see, well, where have they been when times were much better? If we go back to December of 2019, the stock traded at 51. Back in 17, it was in the 60s. So I would say, like, just eyeballing historical prices, if they can get the business fundamentals turned around, you could have a $50 price point in here. All right, looking at where analysts think they'll land on an EPS, you got minus $7 last year, projected to only minus $4, if you will, for 2021. And then perhaps in 2022, you get to flat because you got a 16-cent estimate here. So if they do hit that, that would put your price to earnings at about 168. So still a little pricey by that particular metric. If we go down to revenue or year ago sales, $5.59 billion. This year, the mean estimate is actually less than the year before. My guess is they'll come away and beat that, and that would obviously influence the number for 2022. So there could be a beat in there as well. So my take, I guess, looking at these numbers is I wouldn't call CCL cheap right now that some of the picture is becoming more clear. However, there is long-term potential in this stock, maybe in a couple years to hit $50. Looking at TipRanks to see what the best performing analysts are thinking about CCL. Always want to check out the freshest ratings. 1 month ago, this fella came out and he has it dropping to $14. But the two most freshest have it in that $33 to $42 range. Now that's supposed to be over the next 12 months. So they're at least insinuating there's more upside to CCL over the next year. I think if you're going to hold long term, which is probably the best play, then that's what you want to see, right? You want to see rising revenues, improving EPS, and know that you got to wake up in a couple years before you expect to get your full return on investment. All right, same exercise with Royal Caribbean. Looks like we had a 5-year high in the range of 133 prior to the pandemic. From an analyst point of view, you got minus $18 on year ago EPS. And then similar to CCL, next year you got a plus 139. Now this 139 I'd say is a pretty good bright spot for RCL when you compare it to Carnival. You know, the 2-year forward PE on a $1.39 is going to put you in, I don't know, the 70s range, 60 or 70, somewhere in there. So granted, that's 2 years out, but certainly trending faster to a positive position from an EPS standpoint. On the sales front, you had $2.2 billion last year, barely eking out in the front this year to $2.549 billion. But then the big jump is next year at $9.98 billion, 300% gain there. All right, on the TipRanks side of things, let's see, we've got a couple who have come in. Looks like even the same people have come in 4 days and 6 days ago. They're calling for a price target of 116 and 110. You also have a 117 that came in 1 month ago. So generally positive. There are some bears in here at 79 and 55. But over the next 12 months, I could see that because I could probably see the 2022 forecast improving. All right, last one, Norwegian Cruise Lines. Looked like it had a 5-year peak of about $60, $59 or so. And you're off about, whatever, 50% of that number. See what analysts are thinking here. Last year, you had minus 864. minus $6 this year. And then like the others, 2022 is that magical year, could come in at 52 cents. In that case, you would have a PE of about 60. All right, on the sales side of the coin, 1.28 billion last year, eking out a gain of 1.42 billion. Then next year they get closer to 6 billion. Similar to the other numbers we've seen, about a 300% increase on that front. All right, checking in on TipRanks. I think we have our same friends that must cover the cruise industry. 6 days ago, 4 days ago. This one's 18 days ago. You've got a 40, a 36, and a 32. Interesting that this Robin Farley has it as a hold because she had higher price targets for the other two that we covered. But generally speaking, you've got sort of this $33 to $40 range projected for NCLH. So it arguably is much closer to its peak because it sits at $29 today than some of the others we've looked at. All right, so digging in those 3 cruise stock names, it looks like there's a little bit of life left, even if you're getting in now 1 year after the pandemic. And I would say if you're going to go 3 to 5 years, that's probably your best play, like so many stocks today that are already running up very high. It's going to take a solid 3 years for those companies to start churning out EPS and dividends again. I mean, I guess the dividends could come back in 2022, but I'm not sure if I'd even want that to happen if I was a shareholder, just because there's so much debt to pay down. Like, let's get this ship in the right direction before we pay out shareholders. And then, you know, maybe by year 3, you've got this stock that's running hot again. One thing's for sure that we all know about the travel industry this year, and that is it's projected to be hot. But even the stocks that I picked last year around this time, I mean, they've run up quite a bit. I wouldn't say that Expedia in particular is a great play right now. They've got their own share of debt problems. Now, if you got in at $50 or you got in under $100, I love Expedia as a company, and it's definitely one that I'll keep my eyes open for in the next stock market dip, if there is one. But just know that travel stocks are getting hot. So for me anyway, I would wait for a red day before you bought into almost any travel stock. I think it's a little bit of a beaten down trade, and you want to get at least some sort of discount on your purchase right now, because otherwise the upside, you're trending very, very close to the upside on these stocks already. So you want to get some kind of a discount, and then of course you're going to need to hold for the long term. All right, guys, so that's a look back at cruise stocks last year versus this year and some other stuff in between. Hope you enjoyed it. Please give me a like and subscribe if you did. We'll see you on the next video.